Hello, everyone. Welcome to the market update for Tuesday, December the 28th. This will be the last market update for 2021. Now, as far as we get started here, we take a look at the direction alerts. We've had a pretty good rally for the last week, pretty much. Started last Monday, or not yesterday, but the week before when we gapped lower. Had that bullish reversal, and then since then the market is just rocketed higher. S&P has broken out to new all-time highs yesterday, so it's not unusual that you would pause a little bit or have a little bit of a pullback. And I think we're gonna see that here over the next couple of days, a little bit of consolidation. So that shouldn't surprise anyone. On the other hand, it could just keep rocketing higher. I mean, I've seen that happen, particularly when you get to the end of the year or the beginning of the year. There are reasons that people are buying or reasons that people are selling that don't really have anything to do with the expected movement of the stock. I know that sounds weird, but I mean, there's people that are selling for tax reasons. There's people that are buying for balancing their portfolio, making sure that they own that it shows that they own Apple at the end of the year when they've been trading everything but Apple or something like that. There's a lot of these buy and sell decisions that take place either in the end of a year and in the beginning of a year that don't always make a lot of sense, and so you can get a lot of erratic movements. It can sometimes be difficult to read trends because you get some of these little whipsawing type moves. So just be aware of that there tends to be a little bit more volatility during this time of the year, and that's usually why for many years I usually take the last 2 weeks of the year off as far as trading. Don't really do much. And sometimes I'm pretty cautious in the first part of the year about what I'm getting into. I don't really just jump right in the first of the year. And that's come from just getting burned a few times early in my trading career of trying to read those volatile periods. So just keep that in mind as you're making some of your decisions here in the next few weeks. But take a look at the direction alerts. A couple things that we want to pay attention to. First of all, momentum is now entering in that extreme reversal risk range. Now, it doesn't mean that a market pullback has to happen as soon as you get into that extreme area there. Sometimes trends can continue for days or even weeks in that extreme range. We will start to get a little bit more concerned if we get to the far right side of that box. And what could cause it to happen? Well, first of all, the reason why it's jumped so much is you look at the movement over the last week. The market shot straight up. It really didn't have any pullback days or flat days. It just went up and up and up for the last 5 trading days, and or 5 or 6 trading days, and so it's pushed this over into that extreme range pretty quick. Now, today we might be getting a little bit of a pause. Maybe we get a little bit of a pullback tomorrow or something like that. That could push this, back in that buy range, which is, again, that's good. That's just telling you that there's a healthy trend underway. If we do push higher though, and just keep going, this is the only pause we get, and then we keep chugging along, it could get to that far right side pretty quickly, and that's when you have to start. When all 3 of these get into that far right side, you have to start looking at a possibility of a bigger correction taking place. So we're not there yet, but we'll keep an eye on that. We are noting that we're in that extreme range. Now, market breadth is not in that extreme range, and we're barely getting into the high range. Now, what does this mean? Well, what this is telling me is that there's not a lot of participation in this latest rally. And if you look at a lot of charts like I do, you can see it. We had a big up day yesterday, and very few of the stocks that I was in or looking at were up. A lot of them were flat or down. the rally yesterday was really driven by a lot of the FANG stocks, Apple, Facebook, Amazon, Google. Those were all kind of driving the rally yesterday. So what that tells me is that's not a healthy rally. You want to see a lot of participation. When you're only seeing a few stocks that are driving the market, it can often be a signal of exhaustion. Now, I don't think it's exhaustion, because if you look at a lot of the small cap stocks in particular, they've already been beaten up. They're already way down from their highs. You look at a PayPal or some of these stocks that have just been beaten up. So it's hard for me to look at a lot of those stocks and say that those are overvalued or overbought. They're not overbought. They may be overvalued from a valuation standpoint still, just because some companies aren't even making any money and they're trading at outrageous multiples. But I don't see a lot of overbought conditions on many of the charts I'm looking at. So to me, I think this is telling us, if this continues, again, if we don't see any catch up, what could happen is we could start to see the breadth pick up. We could see a rally day where all the stocks are participating, or most of the stocks are participating, and it could kind of catch up to those larger cap tech stocks. Or it could be a signal that we're getting ready for another pullback, but maybe not a huge pullback. Like I said, it may just be a pullback in the large cap tech stocks where they pull back a little bit. But again, I don't see that just yet. But this is something that does worry me a little bit. Hold on just a second. Does worry me a little bit that breadth is lagging. Now, if it was closer, if we were like on the far right side of the high range, and momentum was in the extreme range, that's not that big of a divergence there. But this is pretty noticeable. And so just keep that in mind if you're trying to understand what breadth means. Breadth is another word for it would be participation. How many stocks are participating, and the more stocks that are participating, the healthier the trend is. And so you just want to kind of keep that in mind. All right. And then obviously sentiment's been high. It's been remaining high. It has moved into the extreme range. We get, again, concerned if it gets over to the far right side, because what that would be telling us is that the optimism is way too high. There's too many people that aren't afraid at all that there's going to be any sort of a pullback, and that optimism is too much. Not there yet, but we're going to keep an eye on that. We've been in the high range, even with the pullbacks. We've remained in the high range, and it would take much because that optimism has remained high on the pullback. If we get a few more days where the market goes higher here, it could push to the right side pretty quick. I'm already seeing a lot of optimism out there amongst traders that are starting to feel like this market will never pull back or can never pull back. It's just going to keep going, but we'll keep an eye on that as well. When you look at the buy-sell ratios, we basically come back together again here. We're starting to see the buys outpace the sells, but we're not in an extreme range. We're not winding out yet. So there's still room there for to run, and that goes back to that market breadth that I was talking about. So we have this big rally, but there really haven't been that many stocks going from hold to buy. We've seen a lot go from sell to hold with the rally, but we're not getting as many of those new buys. Now that could, I'm sure that a lot of them are pretty close, so this could widen out very quickly. Especially, if you think about it, if we go to just pull up, we'll pull up the SPY here. So it could be a situation where you've got, you see where we're in the slide bar here is over in the extreme, but imagine if it was from hold, if there were a bunch of stocks right here on the edge of holds, there were still holds, and then the next day they rally again, they all move into the buy range. It could be a situation where there's just a ton of stocks that are very close to triggering buys, and then once they do, that buy-sell ratio range would widen out pretty quick. So now, in other words, in looking at it right here, it's reflecting that lack of breadth right here, to me at least, that it's still close together. We've had, a 5-day rally, and we're just barely starting to see the buys outpace the sells. But this could jump pretty quickly. Like I said, if there's a lot of those are right on the verge and they all go from hold to buy very quickly, this could widen out there, and we could start to see a more extreme range. I'll probably take a look at this on Thursday if I see anything. Usually I don't cover this on Thursday's update, but if I see anything there that where we see it widen out pretty quick, that'll explain what happened. There's a lot of those stocks that were just on the verge of going to a hold signal, or it could be also going from sell to hold. They might be in a sell but just about to go to a hold with the rally. We could see that range widen out pretty quick. So I'll take a look at it on Thursday, and if it's notable or worth talking about, I'll bring it up in class and we can take a look at that, see how wide that's gotten. Or you can just make a note of it just to kind of check it as part of your daily routine. Just kind of take a look at that. But again, what it's telling me is that there's still room to run. That the rally could still continue. Although again, in the near term, we could get a pause for a day or two, and we probably should expect a little bit of a pause. After the run we've had, there's still I'm not seeing anything that would tell me that a bigger correction is going to be underway or should be underway. So, all right, and then the sentiment indicator is getting close to that extreme range, and again, it shot up due to that rally over the last week. If we do pull back a little bit, or we could see this come down a little bit, but we got to keep an eye on that, because once we get up in that range above that red line, that would indicate again the probability for a pullback. Again, it doesn't have to be a major pullback, but the probability of getting some sort of pullback is getting pretty high at that point. So, and that's basically what is telling us what we've already kind of analyzed, that market's getting a little stretched in the near term, could pull back a little bit, and we'll see but it could also run a little bit further. We could still move a little bit more to the upside in the near term. All right, let's take a look at the watch list here. I did note that on the S&P chart that we were in that extreme range, but we're not at the far right side of that extreme reversal risk, and we're not down by much today. But what we're getting, at least as of right now, is we call that a spinning top candlestick formation. It's a indecision type of candle. Now, it could just be an indecision day, and then it goes right back up. We continue to rally. It could be an indecision day that is ahead of a little bit of a pullback. These are not strong indicators of what's going to happen next. They're just an indicator of a possible shift in momentum. Here's one that happened right here. So this one happened at the top of a run up. It reflected indecision. What did you do? You got a couple of days where it pulled back, and then it was off and moving again. The same thing could happen. Well, although here's one down here where you had an indecision day and it just kept going higher. So, you don't want to look at that and just say, oh, that means the market's going to pull back. You'd want to get a little bit of confirmation of that first. You'd want to see it start to follow through on that reversal, and even then, it only dropped another day after you got a little bit of confirmation on that. And it could be that you get indecision, it just moves sideways for a few days and then continues as well. So But we do want to point that out that, and then look at the run. You can see, I talked about this since last, not yesterday, but the Monday before, we've gone pretty much straight up. And that doesn't happen very often, and especially look at the size of those moves. I mean, here we were moving up, but, you had a little bit of a pause day in there. These were just all solid up days. And that's why we pushed into that extreme reversal risk area pretty quick. And if this doesn't pull back a little bit off of today's move and we go higher, it's not going to take very much to get to that far right side of that extreme reversal risk range. It can only take another day or two, and we'd be right there. So, so from a probability standpoint, when I see this kind of run up and this kind of indecision day, I'd say there's a pretty high probability that we pull back a little bit over the next few days or move sideways a little bit. We don't always have to pull back to alleviate an overbought condition. You could just move sideways for a few days, and that can alleviate it a little bit. But all the indexes are pretty much showing the same thing. The Dow's not too far from its new all-time high, and it's up today. So you have the S&P that's flat, a little bit flat. The Dow's up about 0.25%. The intraday high today got very close to that previous all-time high. Again, I don't know that it's going to break out in the near term here, but even if we pull back a little bit, we should ultimately break out to new all-time highs on the Dow and the S&P and the Nasdaq 100. The S&P's already broken out. You look at the Nasdaq. Nasdaq's down today almost 0.5%. So we have a little bit of a mixed market where the Dow's up and the Nasdaq's down. So in other words, what was leading yesterday, those big cap tech stocks like Apple and Amazon, Google, they're kind of reversing today. You're getting kind of the opposite move today off of that. So now you can see here that what today's move. Well, today's move should cause that slide bar to move a little bit further left. So again, Nasdaq's not in that extreme overbought state yet. The S&P is. I didn't check the Dow. I think the Dow was pretty close. Yeah, it wasn't quite in the extreme range yet, but it's getting there. And then the Russell 2000 is down about 0.5% today as well. Now, although you see the Russell having a pretty sharp move over the last week as well, it hasn't been moving as big as the other indexes. You can see we're way away from getting to a new all-time high there. But this goes back to that market breadth. One of the easiest ways to see if the market, if there's a lot of participation in the market, look at the Russell 2000. It's a broader index. It's looking at 2,000 stocks, and when it is outperforming the rest of the market, if you see a day where the S&P is up 1%, but the Russell 2000 is up 2%, then that's telling you there's a lot of participation. And this is part of my daily routine is I'll look at the Russell every day, and I compare it to what I'm seeing on the other indexes, and it tells me visually, it tells me right away if there's a lot of participation going on, a lot of stocks participating. And I also see it, like I said, when I look at individual stocks. I look at a lot of individual stocks throughout the day, and I'll see it there too. But usually I know ahead of time that I'll probably be seeing a lack of breadth or a lot of market breadth based on how the Russell 2000 is performing. So that's part of the reason why we go through it in the market update as well. Moving on to bonds. Bonds are in a little bit of a consolidation stage right here. Now, whenever you see something moving sideways, you want to pay attention to the direction it's moving in right immediately before it moves sideways, which was down. You had this impulsive move up, impulsive move down. I talked about this last week, the potential there that this is a trend reversal, that we could see bonds continue to go lower. I would expect that once this sideways move is done, we'd see bonds have another move down. But we were talking about that last week as well, and we remained sideways for the last week. Could we continue to move sideways or within this range right into here for another week or so? Yeah, it's definitely possible. Remember, the key part of that phrase is when it's done moving sideways, it should continue in the direction it was moving in before it moved sideways. And even at that, it's not an absolute. That's just a probability. There's nothing that would prevent the bonds from just going straight up, having an impulsive move up and breaking out to new highs out of this range. There's always that, but that would be the lower probability move if it were to do that, at least as of right now. Now, if you had an impulsive move down and then had an impulsive move up, and then it was kind of moving sideways, I'd say there's a higher probability of it going up at that point. But that's not what I'm seeing right now. And you got this little support area right here, so it's kind of bounced off that a few times. You've also got some lower highs as you kind of drift down, so you got a little bit of a triangle formation right here, which would indicate to me that we should see bonds drop lower pretty quick. Within a few days, it should break that support and move lower. We should get a little bit of an impulsive move down. We'll see if it happens, but doesn't always have to happen. But that's what I'm seeing on that chart. And I'd be a little more bearish on bonds based off of that and expect to move lower. Gold, again, gold's been kind of all over the place, and we've talked about this impulsive move down, and then it was kind of moving sideways. We said it's probably likely to have another move down, but it's been kind of just grinding higher here. Now, this could all still be part of a correction, or it could be that it did reach a little bit of a lower low right there. This could have been an impulsive move. This was corrective. This would be a real brief impulsive move down. It did go lower, so you could have impulsive down, impulsive up. A little bit of a correction in here. It could be that this is a move down, and this is wave A, wave B, wave C of a bearish ABC pattern, which would indicate that gold maybe could be starting another move lower. The bottom line, I've talked about this probably the last couple updates, is that gold has been really hard to read its trend. You can see it's really not stayed in the trend for very long. And when you back out, you can see it a little bit easier. You go out to a 2-year chart. So this is basically, gold has been non-trending for the last year, or at least the last 6 months. It really hasn't been going anywhere. It's been kind of stuck in this range. And so I would probably assume that trying to read the weekly direction of gold right in this while it's in this range is probably, you're probably guessing a lot, and I don't like to be feeling like I'm guessing when I'm trading. I would probably wait till it can break out of the range. Although that's what it did here. It started to break out of the range and then came right back into it here. But I would want it to break out of that range before I was trying to get more confident in reading the direction of gold. That's just the bottom line. I just see too many. I don't see a high probability move where I could say, boy, this is looking like it's going to go up this week or down this week. I could see, I'd be probably leaning a little bit more towards going lower, just because, this looks like it could be kind of that correction of this move down. We've reached kind of near that 50% retracement area. But it's been grinding higher last week, and could it do the same? Could we just keep grinding higher? Yeah. So I just don't see a high probability move there. And so my outlook on gold is it could go either way this week. How's that for analysis? But yeah, it really could. Oil's been a little bit stronger trend. We talked about this last week. This looked like we had this impulsive move up off the low. This looked like an bullish ABC pattern right here. Then we've had this nice run up. Note the spinning top candle. This is an indecision candle. Could we pull back a little bit off of that or move sideways a little bit off of that? Yeah, that's definitely a possibility. Now we're not in the extreme reversal risk range, so we're just getting into the buy range. So I would assume that there's still more upside, and I still believe there's more upside in oil. I think this was the larger pullback right here, and that this is just the start of the stair step up. So we could get a little bit of a pullback or move sideways for a couple of days, and then I still think we're heading higher. Now, again, I'm not ignoring the possibility that, maybe this is a wave A down, and that this is A, B, C. This is a bearish ABC pattern, and maybe that's wave B, and then we get a larger wave C down. I'm not ignoring that potential. That's always there, but I'd have to see this start to move down in more of a sharp, impulsive direction, moving down before I'd start to assume that likelihood. Now, you could also, if it moved below this low right here, because if this is wave 1, wave 2, and we're in wave 3, then wave 4, this is L8 wave analysis, wave 4 can't trade into the territory of wave 1. So if we did get a pullback right here and it's still going higher, you can't have wave 4 get in the territory of wave 1 and go higher. So if it drops below this area right here, it would increase the probability that we're in a larger downtrend, that we can move lower out of that. And you can see we're pretty far away from that right now. So until I'd see that happen, I'm just going to assume this is going to be just a smaller pullback, and or move sideways, and that we're going to continue to move higher. That would be the higher probability outcome right there. The dollar, again, we're in a sideways consolidation. Once this sideways consolidation completes, it should continue to move in the direction it was moving in before it moved sideways, which was up. So right now we're in a sideways consolidation, but I would assume that once that is done, we should continue to move higher. The dollar should continue to move higher. The VIX, you can see it's come way down since it spiked up last. Excuse me. I would note, though, you have a little bit of a bullish reversal candle today. That would be bearish for the market. If the VIX started to move up, usually that means the market's going down. But really, all that's doing is confirming what we just saw in the S&P chart. That both, we were getting a little bit of a bearish indecision candle with that spinning top on the S&P. We're getting a little bullish reversal spinning top candle here on the VIX. There's nothing there that's telling us anything we don't already assume, which is that we could possibly pull back a little bit over the next day or two. Remember the VIX, when we look at the VIX, I think it's important to keep reminding everyone that the VIX isn't going to tell you something significant every single day. In fact, most of the time it's just telling you what you're already seeing, which is what I just got done telling you. When it does do something like spike in an unusual fashion, we want to pay attention. Or if it starts moving in the same direction as the market, you want to pay attention. So if we started to see the market go higher and the VIX go up, that tells me immediately that the professional traders are still buying. That's why the market's going higher, but they don't trust the rally. They're buying protective puts while they're buying the stock, and so that's causing the VIX to move up as well. And again, it's just it's a warning sign that maybe you shouldn't be trusting the rally either. So just, sometimes it seems like I skip over the VIX or just cover it real quickly, or that's why it's not always telling us something, and we don't want to assume it's telling us something every day when it's not designed to tell us something every day. If it just isn't, nothing's happening like today, you just want to just skip over it and keep moving on. Because believe me, if you look at a chart long enough, or you want something, if you want the chart to tell you something, you look long enough and it'll tell you whatever you want to hear. In fact, just let's take a side bar here and just address that some of the best analysis is that I can do is in that first 5 seconds of looking at a chart. If something is obvious, when I pull up that chart, it just jumps out. And you don't even have to be an expert chart analysis analyst. If you are just starting out, is it pretty obvious when you can see if a chart is up or down, if it looks like it's going up or going down? It should be pretty obvious in many cases. Now, if you've educated yourself a little bit and learned about the stair steps and impulsive versus corrective moves and things like that, the same thing will happen. It should jump out at you. Does it look like it's moving up, moving down, or moving sideways? That first 5 seconds is really the most important, because what can happen is if it's moving down and you want it to go up because you own all these stocks, I promise you, if you look at that chart long enough and try to find any reason why it should start going up or will start going up, you could talk yourself into or find whatever evidence you want to look for that would tell you it's going to go up. But chances are that the harder you have to look and the harder you have to analyze, the less reliable that analysis is. Now, I run into this a lot because my job is to give an opinion. My job is to tell you what I think the market is going to do, and sometimes the market is saying I can go either way. I could go. I'm not in a high probability state right here. High probability directional state right here, and that's wwhy sometimes you'll start hearing me give you an opinion on something, and then I'll say, well, actually, it could go either way, right? Because I kind of have to make myself realize sometimes that, hey, it's not real clear. It's okay to say it's not real clear. And I don't want to be trading a lot when it's not real clear. I don't want to be taking on huge positions when the trend direction isn't obvious. So, if you're taking down notes right here, just jot down the first 5 seconds are the most important. The first 5 seconds when you pull up a chart is going to be the strongest indication of the trend of that stock. And again, don't be afraid to say it doesn't look like it's trending. We just got done doing that with the chart of gold. It really just isn't telling us much of a trend direction at all. And but I promise you, if I look at that long enough and analyze it long enough, I can come up with a direction if I want a direction. It may not be accurate or may not be have a high probability of working out. All right, let's take a look at semiconductors here. Broke out yesterday, and again, we were anticipating this. We were looking at this as a ABC correction. The fact that it was moving sideways was telling us there's a high probability that once that sideways move was done, we should break out. We did break out yesterday. Got a bearish reversal candle today, though. So this is telling us what everything else is telling us, that we could be pulling back a little bit. This is a pretty strong move. In a short period of time, we could move a little bit sideways or pull back a little bit. We're not in the extreme reversal risk range, but we're very close. I think another move higher, if we had another new all-time high, it would push us in at least into that extreme reversal risk range. Dow Transportation Index, same thing, very strong last weekend. It's actually up today, but it's giving that spinning top candle formation, indecision. Bitcoin actually was trending up, and then it had this big move down today. So it could be that this was just a little bit of a bounce for another move lower. We might come down and test the support area down here. So I would assume. So again, what jumped out at me in that first 5 seconds? Well, immediately I'm seeing lower highs, lower lows. mean, I did see it, when we were here last week, it looked like maybe we're bottoming out right here and could be in a trend reversal. This is looking a little bit impulsive. So this move down, it's just put in a lower high again. And I would expect that we go to another lower low when this is done. So I'm a little bit more bearish on Bitcoin today with that move down. All right. I don't have too many stocks to get into today. And on some of these, I'd like to save a little bit more for Thursday's class. So I have that, because that is the stock specific class. I want to make sure I have some for that class. A lot of these stocks in these sectors we already have in our watch list, or we're already trading, we're already in them. But I did find a couple in construction. Some of these we've watched. ASPN we've watched a few times. 95 strength rank. And we actually traded this recently off of this low. It looked like this was a pullback. We started to move up. And it reversed back down, went lower. But this looks like a larger ABC correction now. And I'm going to put this in the watch list, but definitely want to wait for this to go back to a buy signal as confirmation. And it's still a ways away from that, but I'll throw that in the watch list to keep an eye on it. And then another one in the construction sector was this FIX, FIX, Comfort Systems, 90 strength rank. But it also looks like it's coming out of a larger ABC correction here. It's also close to going to a new high. And it's real close to going back to a buy signal too. So we'll throw that in there. Doesn't mean we'll trade it. I've got all the money. I've used up all the money in the portfolios as of right now. But we'll keep this in case we do have funds that get freed up here. Another in the retail sector, another one that we actually traded that is back on the radar again is under the hold section right here is Boot Barn, BOOT. We got 96 strength rank. We got stopped out of this one. This is another one that we traded this pullback right here. Went back to a buy signal, had our stop down below here. We got this big sell-off, got stopped out. It went a little bit lower here, but now looking back, it looks like we got in on a wave B. Remember, wave B is a suckers rally. Nobody likes to be a sucker, and maybe I should invent another name for it so it doesn't have such a negative feel to it. Because we're always going to have times where we buy into a wave B, we buy into a suckers rally. I've been doing this a long time. Sometimes it's hard to tell. You try not to. I try not to pull back on like when you have a one pullback move. I'd like to see a little bit of a possible ABC. It looked like we kind of had a little bit of an ABC, or it was a little bit choppy in through here on the pullback. It looked like it was very likely just the end of a correction. We were going to break out and go higher, but in hindsight, it looks like that was wave A, wave B. This is wave C. If this can go back to a buy signal, I think it could ultimately end up breaking out. I do like the retail sector. The retail sector has been beat up quite a bit, but if you paid attention to some of the holiday numbers, retail had one of the highest gains that we've seen for a number of years. So you got a situation where where consumers are buying things, retail stocks are down, they've been beaten up. They have a potential to really rally this next year, and so even outside of just looking at high strength rank stocks like Target and Walmart and some of those could start to stage a pretty nice rally here. Not there, maybe not showing it just yet, but those are areas to probably keep an eye on. So I wouldn't be surprised if we see this retail sector up near the top of the sector list going into the new year. But this is one we'll keep an eye on. We'll put it in the watch list and see if we get a new entry into that. Taking a look at the portfolio real quick. We made a big, we got down as low as 80,000, and with the stocks win right now, it's bumped us almost back up to 90,000. I like the trends so far that I see in these. Eli Lilly rebounded the last week. Again, a little bit of a bearish candle today, but and I have to check where my stop is. I could, if I don't already have the stop right here, I could move it up. I think I might move it up. In fact, let's go ahead and do that. I think it's all the way down here. Let's move it up to, what's that low? Move it up to 260. In fact, let's do that right now. So we have it at 237 right now. We're going to move it to 260. And why is that going to be important? Because we got in at 261. So it would significantly reduce our risk if it does come back down. And remember, you always want to put your stop loss at a point where you know that you're probably wrong. And again, that could be different for different people. But I would assume that we're right here about to break out. We have this dip, this pullback right here. If we get back below this point right here, I probably want to be out of the trade because I don't know what it's doing at that point. It could pull back a little bit after the run it's had, but it shouldn't come down below this low. And if it does, I'll get out, and I'll still lose some money because we got in at 261, but it'll be very little. And so that once you get that higher low established, you kind of want to move your stop. We had our stop down there. We're going to move it up to here. And now we basically have a break-even trade. Obviously, it could gap below our stop. We've seen that happen a few times, but chances are that we'd be able to get out at break-even if it comes all the way back down. And we'll keep moving it up as the stock if it keeps trending up. All right, LPX, our stop was already, I think, down below this low right here. So, but it's, I don't know. Let me check that though. We've been in this one for a little while. Maybe I had the stop down here. What is our stop at? Let me look at it. Stops at 63. Oh yeah, it is all the way down here. Let's move it down up below this low on December 20th. It's at 69.59. So just put it down at 69. Now, again, we got in at 69.80, so we're basically at break even on that if it were to come back down. All right, LPI, I don't see a reason to move the stop. We had our stop down below here, but it has been moving up a little bit. A little bit of a bearish candle today, but I assume that's going to keep working its way up. I think that's one of the oil stocks, yeah. So remember, the oil chart looked like it could pull back a little bit. It was up pretty sharply last week, but overall, it looks like it should continue to trend higher. So I still like these oil stocks to perform well. HBP. Now we are moving high. One thing we do have to keep an eye on. We're on the far right side of the extreme reversal risk. Now, there have been some stocks that I've used this exit technique with that have, we've gotten out of them and then they turn right around and rocket higher. The tough part when you see this type of situation is you don't want to give back the gains you've already made. But you also don't want to have this thing come all the way back down. If this is going to move back into the buy range, it might come all the way back down and retest that breakout area or something like that. So there's a couple things we could do here. One, you could use a real tight exit strategy where you could look for it to close below the low of the previous day. Notice how during this whole run up right here, we haven't had a day. Again, the key words there are close below the low of the previous day, not trade below the low of the previous day. And so you could wait for a day where we actually close below the low of the previous day and take profits, go ahead and get out. The danger in that is it doesn't always mean when it closes below the low of the previous day, it's done. It could come right back up and take off again. But if it is going to come back significantly, you've preserved the capital you've made on that run up. That's the benefit. And the reason why I'm not usually too concerned with using that technique to get out is I can always get back in. If I take profits here and then suddenly it reverses and breaks to a new high, could I jump right back in again and buy the shares again? Yes, I could. And I don't always do that because sometimes when I'm getting out of it and I've locked up a trade, I start looking at somewhere else I want to get into that's maybe down a little bit further that can have that potential rally up. This has been rallying up for quite a while. But another thing I could do is I could move my stop up. The stop right now is down in this area, I think. I could move it right below the breakout area, so right in here. And maybe that's what I'll do. I'll just move it up to, let's say, about 960. And let's see what that would do if it moved up to 960. We got in at 912, so that would at least allow us to get out at a profit. If it did get down to 960, we'd still get a profit out of it. But we're also allowing it some space to continue to move higher. So we'll make that a little adjustment. See if that helps. Let's flip this back to signals here. ALCS just barely broke out. Again, our stop is already down below here, so I don't see a reason to adjust that yet. Now, if we pull back a little bit and then we move higher, we could adjust it to below that low, but that's still a little ways away. We're going to just kind of let it make its move right here. KRUS, we could adjust. I think our stop is down below here. We can adjust it to here, but that's not a big adjustment. I don't see a reason to do that just yet. Still looks good. Looks like it's ready to break out, getting ready to break out. It's pausing a little bit today, but over the last few days, actually. But that would be expected. DNQ still kind of grinding higher. This is our kind of our real estate ETF here that we're holding. It's in the extreme reversal risk range, but not to the far right side of that. So I don't see any adjustment here. Just keep holding on to that. Tesla, a little bit of a bearish reversal candle, but we've had a big move on this one since I waited for a little bit of confirmation here. Didn't wait for the buy signal, and we benefited from that move. It looks like it's working its way back up to these highs. This looks like a bullish ABC pattern, large bullish ABC pattern. Now, as soon as we get a little, if this leads to a little bit of a pullback and we start going higher again, I'll adjust the stop up there, but I don't see any reason to adjust it just yet. Ford, looks like it's starting to, wanting this to break out of this range again. It did break out back here and then came right back in it. It still looks good. Our stop, I think, is down below here, so no reason to adjust that. NSC is working good with this, a recent entry. I think our stop's right below there, so there's no adjustment yet to be made, but we're getting ready to break out on this chart. UPS, remember I love the long-term chart of this as well. I like the shorter-term chart. It's been moving nicely. that's it. So they all look good. Um, Again, we we could look to. Well, we already just made the stop adjustments on HBP, but I don't. Yeah, I don't see any other things to do with the portfolio. Let it keep running up. And like I said, we were pretty much all in. I don't even know what the cash available is, but it's maybe like $50 or something. So now I may trim that if the overall market starts getting into that extreme reversal risk range, and it looks like we could be getting a larger pullback. Probably what I do, I'm not usually just going to get out of trades just because of that, but I'll use that close below the low of the previous day type of tighter stop, and try to build a larger cash position. But like I said, I don't see anything right now that's indicating a larger pullback just yet. And now maybe going into the very end of the year on Thursday, maybe there'll be some things we'll need to adjust or tighten up a little bit in case we sell off in the first part of the year. But like I said, I don't see anything yet that worries me. All right. Have a great rest of your week. We'll see you on Thursday for the stock specific class. Bye now.